Currently, the market is moving in a bearish direction, and at this point, we don't know whether to go for it and invest, or stay on the safe side of the trade. Hey guys, and welcome back to this channel. This is Chad Confirmed, bringing you the hottest news in the crypto world. I'm going to discuss my bear market approach in this video, as well as the reason I keep buying Bitcoin every single day. I use the method dollar cost averaging. If this is your first time hearing about this, dollar cost averaging or DCA involves dividing your investment into smaller sums that are invested separately at regular intervals until the full amount of capital is exhausted. Basically, it's investing a fixed amount on a regular basis. This is what I recommend you do. DCA reduces investment risk and capital is protected, therefore preventing a fall in the market. It also buys market securities when prices are declining, ensuring that you earn higher returns. Instead of buying all at once, your investments will be spread out and have higher chances of success. According to behavioral theory, the phenomenon of emotional investing, which can be caused by a variety of circumstances including making a large investment all at once and aversion to loss, is not an uncommon occurrence. Emotional investing can be eliminated or reduced by the utilization of DCA. It basically redirects your concentration on the task at hand, making you a little more objective and rational. So the primary application we'll use today is FTX. FTX was created by Sam Bankman-Fried, or SBF, and is a cryptocurrency exchange built by traders for traders. This platform has a user-friendly interface that is easy and direct to the point, which is essentially great even for first-time users. FTX is available on both website and application platforms, so you can use it on your computer and even your smartphones. What sets apart FTX from all the other applications is that you can view your buy history, which shows the unrealized gains and losses. In this way, you can monitor your trading and can serve as an indication of your progress using dollar cost averaging. Very convenient. So let's get started by using the app. First things first, since we are making investments here, we are starting off with depositing funds. You will be given the option to select one of the available options for depositing funds, such as credit or debit card, a bank transfer, wire transfer, USDC, or cryptocurrency. The maximum amount allowed that you can deposit is $2,000. You just want to enter a particular amount that you want, then click Next. Once you have made the deposit, there will be a notification saying that you can now trade instantly. On the page, locate your preferred cryptocurrency and click on Buy on the bottom left corner. Here, you can now input a certain amount that you wish to put into investment. Moreover, if you click on one time, you will be given option as to the frequency of your investment, like daily, weekly, every 2 weeks, and monthly. Your choice. This is where the role of DCA comes in, where it invests a certain amount you enter at a certain period of time of your choice. If you are satisfied, click if it's correct, and then you can go ahead and submit. After this, you should get a pop-up saying your order was failed. The good thing with FTX is after every trade over $10, you will receive a coin. On the other hand, FTX is also great at documenting taxes, monitoring your buys, sells, profits, and losses. This documentation feature is located in the settings of the app itself. In addition, FTX offers a debit card that allows you to spend your crypto. You always have the option to remove your cryptocurrency from a centralized exchange such as FTX and move it to a more secure hardware wallet if you are concerned about the safety of doing so. However, one thing that you are able to do within the app is move your cryptocurrency out on a monthly or bi-weekly basis, depending on what seems most natural to you. Is dollar cost averaging something you would be willing to try, or have you tried it in the past? I would like to know your thoughts in the comment section below, and if you know someone interested in the strategies during a bear market, then share this link for them to watch. Since no one can say for certain when the market will reach its lowest point, the prudent thing to do during a bear market is to stockpile cash while also engaging in dollar cost averaging on a consistent basis if you are an investor who intends to hold onto their investments for an extended period of time. Now, we are in a bear market or a probable recession. Since we've been in a bear market in the past, theoretically, from this point on, we should encounter positive developments or uptrends that will predictably last for at least 2 years. At some point, there will be ups and downs, since we know how dynamic the market is, but over the period of 2 years, we should perform well in the bull market. Furthermore, there is this rainbow chart that looks at long-term price movements, disregarding the daily volatility. But this is not investment advice, as they believe that past performance is not an indication of future results. Based on this chart, Bitcoin is expected to rise at $40,000, given that we maintain our position in the blue fire sale range. And obviously, there is no assurance to this, but it tells us that once we invest in $1,000 today, your investment will double after 2 years. When you're using dollar cost averaging to buy stocks, you want to stick to your plan regardless of how the market is doing, because as the market starts to move up, you might be tempted to go all in or go crazy with buying. However, in certain cases, the market eventually goes back down. In this way, you can keep an eye on the overall cost by performing dollar cost averaging. Dollar cost averaging is a lifesaver and will be too once the markets fall considerably lower. In DCA, it generates money. The fact that we're in the midst of a possible recession has convinced me to have some cash on hand, which will be essential to you in the long run. Even in a market crash, the crash you're holding onto ensures that you'll make more profit once the market rises again. That's all for today. If you learned something new, like this video and make sure you hit the notification bell so you won't miss any of our uploads. Let me know in the comments below what your thoughts are on how you plan to strategize in the years ahead. Kindly subscribe if you haven't already. This is Chant Confirmed, signing off.